Hello traders, you are welcome back to the Forex Geek channel. So in this video, we are just going to be breaking down a simple yet powerful trading strategy, and that is the EMA and SMA strategy. Okay, if you have ever wondered how to use moving averages to catch trends and improve your trades, then this video is for you. Stick around till the end because I'll walk you through everything step by step. Okay, let us start with understanding why the EMA and SMA strategy works, because I'm sure that you want to know why it works. Okay, moving averages generally help traders understand the market trend by smoothing out price action. Now, the SMA, the simple moving average, is great for identifying the overall direction of the market, while the EMA, exponential moving average, reacts faster, making it ideal for short-term trade setups. Now, by combining the two, we can filter out unnecessary noise and find high probability trades with stronger confirmation. So now let us just break down how to trade with the EMA and SMA strategy. Let us break it down into simple steps that you can apply right away. The first step is to identify the trend. All right, the first step is to identify the trend. Okay, so what we're going to do now is we're going to use the ribbon moving averages so that we can, add different periods at a time. Okay, all right, so we are going to be using the 50 period SMA, the 200 period SMA, the 9 EMA, and the 20 EMA. All right. So just for the sake of clarity, let us, make sure that the colors are, very different from each other. Right. Okay, here we go. So the 50 SMA and 200 SMA are commonly used to spot trends. Okay, basically, if the 50 SMA is above the 200 SMA, we focus on buy setups. If the 50 SMA is below, if the 50 SMA is below the 200 SMA, we look for selling opportunities. Simple. All right. Then you use the EMA for entry signals. For refining our entries, we use the 20 EMA and the 9 EMA, or you can even use one of them. All right. The idea is to wait for price to pull back to the EMA while respecting the trend direction. So when the price touches the EMA and shows a strong rejection, we prepare for a trade. You can see what happened here. You can see the SMAs, first of all, identify the trend direction. Then look at what happened here, how the price retested the EMA. And look at this bullish candlestick that formed here. You can see this rejection candle. So after this candle formed, it was a good opportunity to buy because we got our confirmation. Then you set your stop loss below the previous swing low. And then, of course, you target key resistance zones for your take profit. Right? Target key resistance zones for your take profit. If the trend is strong enough, you can even aim for higher resistance zones. Let's go to higher time frame to find high resistance zones. All right? Just ensure that you are setting realistic targets. That is very, very important. You must set realistic targets, okay? If you want your trade to close, all right? Do not set your take profit at a place where price might not get to. Okay? So you can use resistance zones. If you do not have a good risk to reward ratio, just stay out of the trade, okay? Do not force trades. All right? Make sure you always confirm with price action. I need to emphasize that. Confirm with price action, like this pattern that we saw here. You can look for any bullish candlestick pattern in a buy trade or bearish candlestick pattern in a sell trade, and make sure you set your stop loss and take profits appropriately. Risk management is key. Okay, always place your stop loss below the recent swing low in an uptrend or above the recent swing high in a downtrend. For take profits, aim for previous highs or lows, or use key support and resistance levels. All right. Now, not every trade setup will be perfect. That is why it's important to check high time frame confirmation. If the 1 hour or the 4 hour trend supports your trade, the setup is stronger. All right. And then pay attention to volume as well. Volume is actually important. Volume analysis is important. A trade with increasing volume has a better chance of following through. All right. And then also avoid over trading. Stick to the best setups and don't force trades. If a trade is not aligning with your setup, if you do not have a clear buy signal or a clear sell signal, just stay away from the trade. It's as easy as that. To be on the safer side, just stay away from the trade. All right? So to make this strategy work for you, always backtest it first. Scroll through your charts and check how it performed in different market conditions. You can test the strategy, backtest it, look at different conditions, analyze different opportunities, and see how it played out. That's even going to build your confidence. Go through the chart, go back as much as you want, and look at how different buy signals played out and how different sell signals played out. All right, it's important. Also, use a demo account to practice before going live. Before you start trading live, try to practice on a demo account first. The more you refine your strategy, the better your results. Okay, it's actually very important. Do not think that you just jump into the market and you want to start trading with real money when you have not yet practiced. Well, you might end up gambling and making money sometimes, but at the end of the day, you might be surprised on how you're going to lose. So it's important for you to test your strategies on a demo account first. Okay, it's very important. And that's how you trade with the EMA and SMA strategy. If you found this video helpful, make sure to like and subscribe for more trading breakdowns. Drop a comment below if you have any questions or you want me to cover another strategy. Thank you for watching, and I'll see you in the next video.